Thank you so much for the introduction, Elise. Thank you so much, everybody, for joining us tonight, this evening. I'm going to talk about Malaysia's small cap this time around. I titled it Small Cap Today, Huge Potential Tomorrow. I think last year was a very good year for Malaysian small cap equities. This year has been quite challenging, but we do have opportunities that we do see in terms of the small cap space over the longer term. So what I'm going to do is basically talk about the global markets a little bit, just to give it a bit of context of why we think this time around, even investing in small cap equities do give you a bit of potential in terms of higher returns, as well as the ability to diversify your portfolio, not just in your large cap equities that you have in your portfolio today. Right. So first and foremost, we have to touch on global growth recovery. I think this is something that everybody's talked about in the investment space in 2021. We're expecting the world economy to be about 5.9%, 6% this year globally. That is, of course, coming off from a low base last year because of the pandemic. But currently in October, we're no longer looking at what 2021 growth can offer us. We're looking at 2022 as well. In terms of global growth recovery, we're looking about 4.5%. And this is quite key in terms of the Malaysian aspect, because the global growth recovery does play a big role in how Malaysia recover as well. Of course, this year, if you look at the Asian markets as a whole, we've been lagging in terms of growth compared to the developed markets, and mainly because of the vaccination rates that you see, and of course the Delta variant, the coronavirus. So I'm going to touch on that. That is quite key in terms of where we are positioned, even in the small cap space. Right? Couple of reasons for this growth forecast this year. One is the successful vaccine rollouts. I've talked about this a lot of times in a lot of webinars. We've seen this in developed countries. We're going to see this on the Asian side of things soon. For example, in ASEAN, we're going to see a lot of rapid growth in terms of vaccination. Malaysia, for example, is the third fastest vaccinated nation in ASEAN. Secondly, policy support from governments and central banks. This is something that has guided the global markets, right, for the past at least 6 months, because of the Fed tapering, because of the potential rise in interest rates. But we do not see as a uniform approach, because maybe the Fed will be doing a lot of things, cutting the bond purchasing program, reducing interest rates. But other countries, for example, in Malaysia, might take a bit of a cautious approach instead of an aggressive approach, given that we are only now going into a more sustainable recovery stage, right? And thirdly, one of the reasons for global growth, even for Malaysia growth, is the amount of firms or companies that survived the COVID-19 pandemic, the adaptability of these companies. So we're looking at those kind of companies to basically provide a lot of growth globally as well as in Malaysia. So if you look at the image on the right there, a lot of this growth will be normalized or toppish in the developed countries, but in Asia, in emerging markets, you will see those growth to be a bit higher. Okay. And the other thing that has been a great topic this year is, of course, inflation. Inflation is going to spike in 2021. You've seen this already. If you look at the economic data globally, Asian, Malaysia, there are spikes in inflation. I'll touch about in Malaysia later, but generally, especially now you see the oil prices are pretty high. The inflation is being caused by the supply bottlenecks that you've seen in the markets, right? Demand has improved quite a fair bit in developed markets, but the supply has not been able to meet those demand. So that's why you see this inflation spikes going on in 2021. But it should prove to be temporary, although it will still have a couple months of prints in terms of inflation spikes. But over the longer term, we do not think inflation is going to be a problem while supply starts meeting where the demand levels are at today, right? So we do not expect that sustained inflation. Reason being is because we are not surprised by it. We expected inflation to be spiking up post-recession. Measures of inflation usually rebounds after a recession, but it will moderate in the longer term. We've seen this back in 08, 09 during the GFC, where after the recession, inflation spike. It's quite normal, but it does not continue to be at high levels after that initial spike. This time around, of course, it's a bit ununiform, unsynchronized the way it's recovered. The US recovered first, UK recovered first, Asia not so much. But generally, wherever the inflation prints come in, you will see that it will not be sustained over the longer term. That's what we believe. Okay. And in terms of a lot of our investment strategies, a lot of our investment theses, whether it's global strategies, Asian strategies, or even Malaysia strategies, small cap, big cap, are all centered around vaccines. We are looking at this data more and more nowadays. We're no longer looking at the number of cases, we're looking at how fast vaccines are going to be rolled out, right? So the target is to have 70 to 80% vaccination rate across the globe by end of this year. But it has been expedited, if I can say that, or accelerated. As you can see, even for Malaysia this year, we are already about close to 90% adult population vaccinated already. So this is very, very key, because this is where the source of the recovery would be. This is the main source of it, other than the other activities, but this will have the ripple effect into how the economy, how the demand, how the supply is going to recover in Malaysia and across the world as well, right? And the good thing is about investing in this part of the world, whether it's Asia, whether it's Malaysia, is we can have the ability to look at how it works in other parts of the world. So this is why I want to highlight this, despite me talking about Malaysia small cap. Reason it's being is because if you look at Europe, if you look at US, post pandemic, although we are still some sort in a pandemic, but post recovery, when they start going out, you see spending is now back to pre-pandemic levels. Consumer confidence is back to pre-pandemic levels. So that shows that yes, this time around, a recession, it is not so structural. It's more of something that we didn't expect. When things goes back to normal, people would want to go back to normal as well. So economy would have that growth, the demand will recover, supply will recover. So it is on track today, right? Even if you look at number of cases, that's not important anymore. But even in terms of service, in terms of people going out, it's a good way to look at it, right? Recovery in Europe, in the US, in terms of restaurant bookings, even have recovered sharply. So you can expect that to happen in Malaysia as well. So it's a good way for us to at least take an educated guess on the trend of how we are going to recover. Now we are already open, right? So we have a sense of how it's going to recover and what it means for the financial markets, right? In terms of preference for asset classes, we'll talk about small cap equities later, but in terms of preference in general, globally, we do like equities versus fixed income. Particularly fixed income now is facing a bit of pressures now, but we do see opportunities in fixed income as well, but pockets. But if you talk about blanket opportunities, it will mainly come from equities. We like equities globally. Asia, we like even Chinese equities, and we also have positive views for Malaysian equities as well. Okay. Talking about equities, of course, a lot of people will be talking about valuation. People will say, hey, I wouldn't want to buy equities today. Stocks are expensive. Valuations are so rich. But nothing looks cheap these days when it comes to equities if you compare to historical valuations. That is a fact, right? Bargains are difficult to find today, but what you should look at when you want to buy a stock today is how much the earnings potential is, because valuations are rich, but earnings potential, earnings growth could probably justify the rich valuation that you see. So that's how we are going to look at it. That's why we like equities, although certain stocks does not look attractive in terms of valuation wise, but earnings potential could justify that. But of course, if the valuations are attractive, like for example, Asian equities, Chinese equities today are attractive, we probably want to buy that as well. Okay, so that's mainly on the global side of things. Now I want to bring back to Malaysia, right? So we know global growth is coming, or global growth has happened to a certain extent. But what about Malaysia then? Malaysia, along with other Asian countries, has been lagging in terms of growth because of the slower vaccination rates, because of the Delta variant COVID-19, right? So it will be contained, right? But we do expect it to recover, or at least signs of recovery to be more material by the end of 2021. Bank Negara is expecting Malaysia to have a GDP growth of 3 to 4% this year. We share the same view because, again, it's not that we couldn't grow this year, it's just that we had external factors that couldn't let us grow. But other countries are growing, so that did support some businesses, some sectors in our country. But in terms of demand, in terms of services, probably not so much, right? So we see strong recovery in export-oriented sectors, right? In line with the global demand, hence why I touched at global demand, you will see that flowing into Malaysia already. And you've seen that even in the second quarter numbers, the third quarter numbers, you've seen that even though we didn't recover as much, but because of the global demand recovering, because of global activities recovering, we shared a slice of that pie. So we like that, and we do think that it's going to be something positive for us over the next couple of months as we start to go out and economies or economic activity starts to resume, right? And there is a slow improvement in terms of services sector because we were in a pandemic and we were in a lockdown compared to other countries around Asia even. We were in a longer stretch lockdown, but now you will see that services sector should recover. We've seen that already in other countries on how the impact is. And these three main things are going to contribute to how Malaysia GDP growth is going to be. Okay. So before we get to fourth quarter where we are at now, because of the strong demand conditions, all the easing containment measures, you will see third quarter numbers to be quite disappointing. So this is something that we need to manage our investors, right? Because it's going to be a very sentiment driven. They read the reports, they get panicked, they sell. It's something that is quite concerning, of course, but you should look forward, right? There are a couple of factors that would contribute to growth that you should not be so concerned about historical numbers that's reported, especially when it comes to the economic recovery in this kind of market conditions, right? Couple of factors. External factors would be the strong global demand conditions, right? This is something that's going to help us in terms of export. Export growth will be quite strong. We were recovering a little bit in the second quarter. Third quarter, we were recovering as well. The numbers are not officially out yet, but this trend will just make our export-oriented economy, our sectors would to be quite healthy in terms of their recovery. And the global tech upcycle, in terms of tech stocks, you might not be interested in it anymore globally because valuations are expensive, you take profit, you shift from growth to value. But in terms of the business itself or the industry trend when it comes to tech, that will be a good external factor to us because we are is a semiconductor heavy E&E sort of manufacturers. So we do export a lot of those expertise, a lot of those products outside of Malaysia. So that upcycle would give us a bit of growth in terms of our growth recovery in Malaysia. That's external. In terms of domestic factors, you've seen this, the rapid vaccination rate has allowed us to travel now. We can travel not just domestically, we can even travel out. Ongoing policy support, those political concerns, those signing of MOU, the policy supports from Bank Negara and everyone else, that is going to be something that we'll see at least up till second half 2022. Again, where we are at compared to developed markets is very key. So the policymakers, the central banks need to put that into account when they are trying to reduce the support to the country to ensure a more sustainable growth, right? And of course, the more substantial impact or the ripple effect of substantial infrastructure projects that's large scale is also the other factors. Once economy starts to reopen, you will see these infrastructure projects to continue. So that is also something that you're going to see in fourth quarter that's going to be quite attractive for a lot of foreign investors even to come into Malaysia by then. Okay, so again, global demand to support expansion of gross exports is very, very key. We are an export nation, right? So stronger gross export will reflect on how we grow. And of course, this has been seen already even in the second quarter 2021. A strong external demand have given us that room for growth in 2021, despite being in a lockdown, because businesses were allowed to run. So we were able to at least do a lot of export-oriented business, right? And not only that, now since economy starts to reopen even better, economy activities is continuing, you will see the support from employment side of things that will translate into demand, right? So employment in export-oriented sectors will continue to grow, because in the second quarter, these are the essential factory workers that was supporting the economy a little bit at that point of time. Now you will see more and more. There's going to be more workers. There are going to be more workers, service sector even, and even in the commodity sector. There's some shortages now. You read reports, there's some shortages in certain sectors, but you will still this continuing quite actively in the next couple of months in the fourth quarter. Right, so growth is expected to accelerate in 2022. Fourth quarter, you will see the activities starting to kick in, but the numbers won't reflect it. In 2022, you will see further expansion in global growth recovery, because not only the developed markets are recovering, the Asian markets, emerging markets are also recovering. Improvement in consumer sentiment, that is given, because as people go out, demand starts to reflect the economy, and you will see that, and that will also be caused by the strengthening of labor market recovery, and that will also the other thing is also the expansion in commodity related production, right? So anything that is commodity related, that will be helping us a lot. The rapid production of SK320, all these things will be continuing, and of course the faster progress in large infrastructure projects. So these are very key to Malaysia centric, and although we are investing in small caps, the one that I want to touch about later, these factors plays a very key role on where we look for stocks in the portfolio. Okay. In terms of unemployment, I just want to touch that a bit, just to give a bit of color of how unemployment is in Malaysia. Yes, it rose in June. In July, the numbers are probably not going to look as great in August as well, because of the lockdown. But that is a lockdown effect. But we expect these numbers to shoot really back up in September, in October even, because of the ability for us to go out, not only on the export-oriented sectors, but now on the services sectors as well. You heard in the news that because we opened up the borders for domestic travel, hotels today are requiring more and more people. So those are just an example of one sector that will recover in terms of unemployment, right? So this is key. All this data is very key for us to basically navigate trends and see what kind of recovery that we can see for Malaysia, right? So you will see that near-term risks in terms of numbers, because numbers are, of course, backdated or historical, but going forward, you can expect these numbers to be better. Okay, and in terms of inflation, inflation rate in August eased about +2% compared to where it was in July, was about 2.2%. But again, you will see this spike in the fourth quarter. I wouldn't be surprised by that, because we open up the economic activities, we open up the borders, so people will just start buying stuff. Supplies are going to be there. So inflation is going to spike up in the fourth quarter. But again, same goes to how global things are. We do not expect the same thing. We do expect the same thing to be in Malaysia, so it wouldn't be sustained, right? So the BNM is maintaining a forecast of 2.2% this year, which is of course much higher than what it was last year. But again, something that is manageable, something that we know why it's happening, so it's something that we can control, right? So as long as supply starts meeting where the demand levels are, we do not expect the inflation numbers to be on a long term. Okay, and then in terms of OPR, we at Maybank Asset Management, we do not expect any change in the OPR. For the past 8 consecutive meetings, Bank Negara has maintained it at 1.75%. We expect this to maintain at least up till second half of 2022. That will be where we think where the policy support starts to ease a little bit, where economy starts to be more sustainable in terms of recovery. Maybe you will see a 25 bips hike in OPR by then. But at this point of time, it is where it is quite accommodative to where we are at in terms of the economic recovery cycle. as well as to ensure that that cycle continues to be sustainable going into 2022. So no OPR change expected this year, and at least first half next year as well, no OPR hike as well. So coming into the financial markets part of things, right? In terms of fund flows, for the past couple of months, if you look at fund flows, it has been quite depressing because in terms of equities, it has been a net sell position for the past 24 or 25, 24 consecutive months of net sell, mainly from the foreigners as well as Malaysian institutions. But last month or August numbers saw the first month of foreign inflow into Malaysian equities, and last week as well we saw a net buy position for local equities, right? So the downside is quite limited in terms of Malaysian equities here, not only on the fundamental side of things, but also on the flow side of things, because foreign shareholdings is pretty low, it's about 20%, right? This is very, very low. So we are not expecting it to be presenting a lot of downside risk. It can only go up now. Foreigners will want to look for opportunities, and if Malaysia has a very strong political stability, strong economic growth potential, then you will see foreign investors coming back in. But of course, this is mainly from the large caps, because the flows for the instis, for the foreigners, will go to large cap. For small cap, the retail investors has been the one net buying. Of course, they buy large cap as well, but bulky in the small cap, they've been net buyers for the past couple of months, especially last year. But they turned net sellers recently. But again, it's not something that we're concerned about, because the composition of who buys small caps are vastly different from the big fund flows, right? So in summary, in terms of Malaysia, growth has improved in second quarter, right? Of course, not as much as what we expected, because activities were dampened by the MCO in the second quarter. So the third quarter, you will see numbers to be very disappointing, but do not worry, because fourth quarter, the numbers will improve, right? This is in line with the strong external demand, as well as the easing of the containment measures that you are experiencing here today as Malaysians, right? So the Malaysian economy is expected to grow about 3 to 4%. This is, of course, a revised number from earlier at 6. But again, it's not something structural. It's because of a pandemic. So it could catch up quite well going to 2022, but you can expect 3 to 4% in 2021, right? But anyhow we look at the situation, it is very much dependent on the COVID-19 risk as well. So if it's nicely contained, if the strict SOPs are met, right, and the cases are manageable, we do expect things to recover quite well. That's our view, right? So in 2022, going into 2022, this growth potential will accelerate in terms of demand, in terms of supply, and this normalization of economic activities will just be fueled more and more by the higher vaccination rates, not only in Malaysia, but across the region as well, because we also need to export to these nations, and these nations, as their vaccination rates increases, their demand increases, and we can export more things to these countries as well. So that's why we are looking at those kind of expectations, right? So those are the outlook, right? We are looking at how Malaysia, how global is going to recover. Reason why I want to touch on that fact is because it does influence on how we manage our portfolio. And the topic today is on small cap stocks, small cap funds. So what are small cap stocks? For the audience who are not familiar with small caps, basically in layman terms, it's smaller companies in terms of market capitalization, right? You have large cap companies like your Tenaga, your Maybank. These are small cap companies, right? Companies that you probably never heard of, but you've seen their products, but they are not big, they're not covered. So small cap stocks, usually if they are listed on Bursa, it's no more than 2 to 3 billion in terms of market cap, right? And usually because they have a smaller profit base, they can generate higher earnings growth compared to the large cap stocks, right? But the general consensus that small cap stocks are usually very volatile because they are quite correlated with the economic conditions. So when economies are doing so well, these small companies usually are impacted, while large cap stock, they are a bit more resilient. So their earnings growth probably wouldn't be as attractive, but they are there. right? So the one thing that I want to highlight before I even start talking about the fund is when you want to invest in small cap stocks in general, you must expect higher volatility, but in return, you will be or you can be rewarded with potential higher returns over the longer term. The volatility will be there, but over the longer term, it will be quite attractive. So in terms of this, if you look at where FBM KLCI is versus the FTSE, the FBM small cap, um, if you look at the returns, total returns, of course, last year is not the best portrayal of what has happened, but over the longer term, if you look at it, returns has always been much higher over the long term, total return here, compared to a large cap because of the way the earnings or the growth potential of a small cap stock. That's why we do suggest or recommend small cap portfolios to our investors, not as a whole portfolio, but a portion of their portfolio. You want to have your large cap, you want to have your fixed income, but you want to have some small cap as well to capture that long-term growth. So that's why we want to talk about small cap today, right? And why you invest in small cap? Today, three main things. One, higher growth potential, right? I talked about this just now. And relative to bigger companies, if you invest in small cap, you have the opportunity to earn or to gain more future growth. That's one. Secondly, small caps are usually hidden gems. I'll explain a bit later, but they usually tend to be under research, not covered by the media, or people just don't know about it. So they are hidden gems. So it gives you a good entry point into this space. And thirdly, it is domestically driven. So if you are concerned about the global fund flows, the global trade, globalization, trade war here and there, yes, it will impact some small cap stocks, but it is quite domestically driven, bulk of it, both on the business side as well as on the fund flow side. Usually their business are either locally centric or export oriented, but with a very strong home base. And the share prices, the investors are usually retail local investors because usually foreign investors come by small cap stocks. Okay, so when I say higher growth potential, because again, it's because you are able to buy a stock at cheap to make things simple, right? So if you're not sure of what stocks to buy, usually you will buy a cheap stock. So it does gives you the opportunity of an attractive entry price. Small cap can give you that without the 20, 30 times sort of valuations. Small cap stocks usually are much cheaper, but they do offer better potential for this thing we call a two-bagger or more than large cap stocks, meaning that they can probably be RM1 today, and by the time you're done, or by the time you hold over a couple of years or 1 or 2 years, it could be RM3. So double a double bagger, we like to call it, right? A two bagger. So for example, Franken is something that we held before. The share price have rose so much. It started off as a small cap, but after we hold them for a long time, now it's a mid cap company where we can never buy anymore for our small cap portfolio because we do have a small cap, right? So it started off at 200 million ringgit in terms of market cap. Now it's 5 billion last month. So again, you have that kind of potential. Large cap companies, of course, can give you that stability, that visibility. Small cap gives you that higher potential growth. And one of the reasons because of that, not only because of the business, sometimes the business itself is great, but it is because it is less covered by research houses. You don't see Maybank, you don't see RHB, CMB covering a lot of small cap names. Reason being is because they are too small, or sometimes they are no interest by a lot of the institutional or foreign investors. So they are not covered, right? So access to information or the lack thereof is been a problem when it comes to small caps. So that's why a lot of investors turn to small cap funds, let the fund managers engage with these companies directly, because this access may not be available for the guy on the street, right? So they are not researched and they're not even covered by the media as well. A lot of these small cap ideas, if you look at the small cap stocks, are probably talked about on forums or blogs where probably you are not involved in that conversation, right? So it's less covered, but that is not a bad thing entirely. Because if it's not covered, there's this price discrepancy or price inefficiency or inaccuracies, if I can say that, where the moment it is covered by a research house or by a media, for example, then it will get a lot of attention. Then that's where you see the returns to be quite favorable for the early investors, because that's when you see your institutional investors come in, and then they will hold strategically for the stock, and your earnings or your potential gains on the share price will be multiplied quite extensively by that time. Of course, this is not a sure bet, but we have to look at certain companies, certain small cap ideas that will work at a certain point of time. As valuations is very key when it comes to small cap, because we need to look at companies that are attractive at entry points, but going forward it will be quite attractive if we were to hold that companies with strong fundamentals, and later will be covered by research houses as well. Okay, and it is domestically driven, right? So if you look at flows last year and this year, the small cap index did attracted more foreign, more local interest, more net buyers, because of it is domestically driven. So again, it's not just on the perspective of the business, because the business is one thing. Most small cap companies are very local centric, but they do have exposure in terms of exports, because they do have demand from China, demand from the US, but their home base is always Malaysia, so they are not affected as much as the big companies. That's one. Secondly, in terms of the flows, in terms of the investment, it won't be so much in terms of the price movements. Yes, it could be volatile over the long term, but you will know what's going on because you are in Malaysia. So you kind of know, okay, markets are doing so well, my stock probably won't be performing, and vice versa, right? So global situations, right? Global phenomena, global events probably won't affect a small cap stock as much, but probably once it's covered by the research house or by a broker, then you will get a bit more attention by the foreigners. But why it is still small cap is probably quite a predictable sort of share class, asset class, right? So that's why we want to talk about small cap, and allow me to introduce our Maybank Malaysia Small Cap Fund, which is basically a small cap equity fund that seeks medium to long-term capital growth, right? So it is a small cap fund. It will go to mid cap max, but it won't buy a large cap company. Okay, so a couple of fun features here. One, again, if you're buying small cap, if you don't know what stocks to buy, you turn to a small cap fund, because it provides you that ample room for growth in a portfolio of small to mid cap companies, rather than trying to identify or trying to throw a dart into what stock to buy if you want to be in the small cap space. So with this fund, you can also enjoy ample room of growth and achieve significant upside in terms of share price, in terms of returns, that is unmatched, definitely unmatched by larger companies. Yeah. Secondly, it has a bottom-up approach. When it comes to small caps, different from how we manage large caps, it's very, very, very much dependent on stock selection, right? So it's probably not driven by sector, by a particular sector. It can in terms of teams, but it's very much a stock selection process. And our team, our fund manager, is very actively managing this portfolio. He has probably more than 100 company visits a year, whether it's virtually or physically, to understand the companies. Again, because information is not readily available, he needs to engage with the companies that he wants to invest in directly. And so he will get a clearer picture in terms of the portfolio, in terms of the company, the business, the future. So it's a very bottom-up approach. And because we are a fund manager, you are able to tap onto our risk management framework. So although we do want to buy these small cap ideas, but we do have some controls in place. So in other words, we want to buy small cap companies, but we want to buy small cap companies that's strong fundamentally, not just stock or small cap stock that you can punt or can goreng lah, right? We want to buy good companies. Okay. So in terms of positioning, so the fund is a small cap fund, very straightforward, invest in Malaysia small caps. But in terms of where we want to invest, there's two themes. It's not sectors, yeah, it's two themes that we want to look at. One is technology, the other is recovery. So the tech sector is one thing that the tech sector and the tech beneficiaries are going to be the one area they want to buy where our small cap stocks are. Secondly, it's the recovery. So again, these teams are not basically companies that provide those services, but they probably benefit from it. So for example, when we talk about tech, so the global tech upcycle will support the Malaysia E&E's production and exports, right? So this will give a rising demand for semiconductors manufacturers in Malaysia. And it has provided a bit of signal that it did recover in the second quarter of the year. Again, although we are in a lockdown, globally it was recovering. So these companies could provide a lot of export oriented products to these countries, right? So it will support E&E production. So we want to be looking at that. So in 2021, a lot of the even big ones, small cap ones, their order books are quite filled up. You know, there's a semiconductor shortage now globally. So we are the second tier manufacturers, if I can say that, but we still provide those services in the value chain. And there's a lot of other things in Malaysia that's supporting tech that these beneficiaries could enjoy. And these companies are quite small here. So semiconductors is one thing. I'm not going to touch too much of it. I think a lot of people know when it comes to semiconductors, you know, companies like MPI, Inari, all these kind of companies. These are the companies that we have invested in. Unfortunately, I cannot share the companies that we want to invest in yet due to compliance. But these are some of the companies that we have invested in. Some of them we started at small cap, now has become big caps. Okay, and the other themes in 5G and related 5G is something that we want to be investing in these companies. Again, we are not investing in the telcos, right? Not the Maxis, not the Axiata, not companies like that. But we're investing in companies that provide or enable 5Gs or Internet of Things, right? Whether it's in manufacturing side of things, whether in smart home side of things, whether it's warehouse logistics, any company or any businesses that uses 5G for their business or leverages on 5G for their business, they must need components, right? So this 5G theme is something that we will be looking at closely, because we want to look at the companies, these small little companies that probably are providing to Malaysian parts of the business or the China parts of the business, but they provide those components, they provide those services. We want to look at those companies, right? Same goes to digital payments. We do look at everything that is surrounding digital payments, right? Digital payments is something that's going to grow and grow in Malaysia. You've seen Maybank QR Pay, Grab Pay, Touch and Go Wallet, do it now. This can be done digitally, but it needs components. It needs devices to ensure it happens, right? So COVID-19 have basically accelerated digital payment usage, and Bank Negara said it has doubled during the pandemic, and more than half of Malaysians today prefers digital payments, right? Again, it's something that we are still growing with, but there are small companies, small tech companies, tech beneficiary companies that are providing into the ecosystem of digital payments. That's some of the companies that we'll look at as well, right? I won't touch on cloud computing because this is something that our fund manager is looking very way ahead. It's something that we don't have the capability with. There are some companies that's providing some components in cloud computing, but not Malaysian centric, more towards the China market. So I won't touch so much on it, but it is a theme that we'll be closely looking at over the longer term. Okay. So that's tech. So when you look at tech, you look at the beneficiaries, we look at companies. Example of some of the teams that we played out before are like MPI, SKP Resources, company like Frontend. So all those companies we have played already. We have it in our portfolio last time. We have taken some profit, but we are saying that we'll be looking at more and more of those companies in the small cap space. Secondly, is on the recovery. Recovery is this very simple theme. I've talked about the recovery in the economy. So we're looking at beneficiaries of that recovery, whether it's industrial, consumer products, or even fintech in the portfolio, right? So as the economy gradually reopens, the demand will come in. So the suppliers will also have to come in. So we're looking at those companies, whether it's on the retail side or the distribution side or even the manufacturing side, right? So if you look at the vaccination rollout for Malaysia, it's already at 89%. So we know it's coming. We've seen what happened in the US, we've seen what happened in Europe. So we know in Malaysia, those kind of demands, those kind of recovery can happen. So this theme is very key. In terms of manufacturing sector, it has rebounded. Yes, we in July, the IPI fell by 5.2%, but in August, because we start seeing this opening, you will see more and more manufacturing activities to recover, right? And most factories will be about 80% to 90% capacity by the time we go into the fourth quarter now. So you will see the subcontractors, the sub-manufacturing contractors, the contract manufacturing players, the small companies will be benefiting from this as well. So this is where we are looking at industrial, manufacturing, consumer-related companies, right? And when it comes to consumer, we are closely looking at at private consumption. Private consumption has improved in the second quarter. Third quarter numbers we have not seen yet, but we're expecting this to recover exponentially in the fourth quarter. So we are looking at companies, say like probably companies like Focus Point, where they provide a lot of consumer related products. Companies like My News, for example, those are small caps that we can look at in this portfolio. Yeah. So I'm not going to touch into other portfolios, other points here, because we are running out of time. But just to touch a bit on performance of the fund, year to date, yes, we are only about 0.5%. We are behind benchmark. Against the benchmark for small cap, it's not purely reflective of what small cap is all about. It's about stock selection. But last year, we did about 45%. This year, we understand it will be some hiccups in terms of equity markets, because Malaysia equity markets just started to recover now. But over the longer term, if you look at 3 years, we are about 16% per annum. Again, we do expect volatility in a small cap fund, but we have proven ourselves is an award-winning fund. Maybank Malaysia Small Cap Fund is an award-winning fund because of the consistent performance that they have given. But again, we have to stomach the volatility. When it comes to small cap, it's all about the potential gains that you can get, right? So I think that's all I have. I'm happy to take any questions if you guys have it on small cap. Thank you. Hi, Elise. I think that's all from me. Maybe I can take some questions.
Okay. Thank you, Mr. Belqaizi, for your insightful presentation. Now we proceed to the Q&A section. Over here, they have few questions. Let me filter first. Okay, the first question is, despite rising the vaccination rate and reopening of various sectors, there are fears that the US stock market might be heading in the long-term overdue bear market in 2022, brought on the sovereign debt crisis. Since what happened in US affected the rest of the world, would you foresee negative growth in Malaysia equity for the coming year?
I don't expect the US to go into a bear market. Unfortunately, I don't agree with that. Although we will see some pullbacks in the US markets for sure. But in terms of what's going on in the US, whether it's affecting this part of the world, actually for me, if there is any sort of weaknesses in the developed markets, it does give an opportunity for the Asian markets. I've talked about this before. If you join some of my other webinars, we are very positive on Asian equities over the next decade. We do think this is the time for Asian to outperform the US market, particularly. Before this, after the 2000s, probably up to 2020, right? 2021 now. 2000 to 2008, we were outperforming the US market, and then from 2008, post-recession, US was outperforming Asia. So if there is a problem, investors will still look for growth. They will still look for growth potential, and there's nowhere else you can go when it comes to growth potential than Asia. And that will also reflect in Malaysian equities. So when I talk about Asia, I talk about China, I talk about Korea, Taiwan, ASEAN, those are the places that we want to look at. In terms of growth, we wouldn't see negative growth, whether it's on the economy or the investment side of things. But for Malaysian equities, the growth would be also dependent on the political situation, because we know that whatever's going on here is not a permanent fix. But in terms of fundamental growth, it won't be a negative growth. It's definitely going to be a positive growth for Malaysian equities for 2022.
Okay. For second question is, will Malaysia enforcement of 51% Bumi Putra ownership requirement for freight forwarding company not only hinder the FDI inflow but also cause higher outflow of FDI in sector in 2022? How it will affect the small cap company in the freight forwarding sector?
It would not hinder the FDI inflow because I think at the end of the day, if for foreign direct investors, they probably wouldn't look at who owns the company. Yes, domestically, probably the expertise having those kind of ownership requirements might be quite a problem, I say, but it won't affect the FDI in the sector. That's what I think at least. In terms of small cap companies in a sector, there's not a lot of small cap companies in the freight sector, but in terms of the fundamentals of the sector itself, we do have quite a positive view over the long term with the thesis of the economic recovery. Again, we are a very export-oriented nation. So as long as the demand globally is recovering, and we have the opportunity, right? We see global demand, and then now we see Asia demand. So as long as that's growth for the next 2-3 years, the sector will be quite well supported.
Okay. Another question is, the U.S. Federal Reserve has indicated that is likely to begin reduce its monthly bond purchase as soon as November, and signal that interest rate increase may follow more quickly than expected. Will there be any concern and impact on local market, especially small cap, with the signaling of U.S. tapering event?
No, like I said, small cap sits uniquely here because probably some of the large cap companies in Malaysia, your blue chips, even now you see your Malaysian fixed income is already responding to that in terms of the Fed tapering, the rising interest rates. But small cap is very much driven by the economy, right? So if you're expecting the economy to recover, because we are at a very low base, we were expecting to recover in March. We are only starting to recover in October. So small cap will be quite domestically driven in terms of the business and flows. That's one. Secondly, even if you look at external demand, that situation, that narrative of a higher interest rates and even Fed tapering, it will impact the financial markets in terms of looking for yield and the fund flows. But in terms of business, it will still continue to grow. So for companies, small cap companies in Malaysia that's dependent, say, for demand in China, would also be performing well. That's our view. But of course, there will be some hiccups here and there because people will just react to sentiment as a whole. But in terms of the stock itself, we do think small cap will be not as affected as other asset classes compared to on the topic that you mentioned.
Okay. Another question is for retail stock in Malaysia is lackluster for a while already. When do you think it will start to attract institutional buyer to buy them?
The retail stocks in Malaysia, actually, for the longest time, they have been they've been doing so well compared to the bigger, for the bigger caps, right? It's lackluster recently, from what our Maybank guys are saying, because people did not have a lot more disposable income compared to what it was back in 2020. People started more investing here, and there were a lot of flows in the third quarter. If you see, there were a lot of flows into bond funds or even bonds, right? Because at one point, the bond funds recovered quite well, and because we are still in the low interest environment, so a lot of retail investors took profit in the start of 2021, and they placed that money into bond funds. So if you look at the flows after 2020, they made like 40-50% in terms of small cap stocks, right? And then 2021, they start taking profit. They need to place the money somewhere. They don't have the stomach yet to go into the market at that point in time, because in the second quarter, if you look, the markets were rallying, especially globally, right? So a lot of money went to bond fund. But now we do think that Malaysians investors are on a risk-on mode, so you can expect markets to be quite aggressive in the next couple of months. But small caps probably would need a longer term to be where it was back in earlier this year, last year. But yes, by this quarter, you will see flows coming back in a little bit to small caps, or to retail, the retail investors coming to small caps.
Okay, another question is, if a company grow bigger and become big cap, are they still eligible to continue grow under small cap fund?
Good question. So in that situation, we can buy small cap companies, but we cannot buy big cap companies. So in a situation where a small cap company transform into a big cap, say it increases to a 4 billion market cap, we can either take profit or we can hold. So I'll give you an example of this. Last year, right, during where all the glove companies went up, when we entered, we bought it in 2019. It was not big caps; it was just small to mid caps, right? So when it increases in market cap by multiples, we couldn't buy it anymore. So it's either we hold it on, we can still hold it, no problem. But if we sell it, we cannot buy it again. So that's the situation for our fund.
Okay. What are the basket of small cap stock in Maybank small cap?
Basket, you mean the sectors lah?
Yeah.
Unfortunately, I can give you stock tips here. I wish I could, but I cannot. But we have probably about 20% in tech related names. We have about 10% in consumer related stocks. We try to increase energy names because of the commodity prices. Where it is now, we probably will see more energy names coming in. Again, those are the recovery themes. We have some construction and industrial products. So top technology, second would be consumer and industrial, and then energy and construction. Those are the sleeves that we have currently. But again, those are not by design. Yeah, again, it's because we bought the stock, not because we bought the sector per se.
Okay, another question is, will Malaysia fall into stagflation due to slow growth as Malaysia GDP has been revised by Bank Negara Malaysia from high of 6% to 3 to 4 as presented by you?
No. It won't go to stagflation. I mean, I don't think so, because again, the revision by Bank Negara is to reflect the current economic conditions. Again, because we were unfortunate, right? When we entered 2021, we were expecting it to recover, but we were unfortunate that cases spiked quite aggressively by June. So we had to close everything down. So that revision is mainly to reflect the current economic conditions. But what I said just now, even if you see, economic activities that were allowed to open showed growth, like manufacturing, right? Showed growth. Of course, the services, the consumer retail, you didn't see that much, but they were allowed to open, they showed growth. So now when everything is opening up, you will see that numbers to follow suit. Of course, we only have 3 months to catch up, but 2022 is where the growth is going to be. Although I don't have a crystal ball, I hope that will happen personally as well. I hope that will happen, but it won't go into stagflation, at least. I don't think so. I hope not.
Okay. Another question is regarding how many % of liquid asset is your fund holding now? When do you think we'll start to deploy it?
Okay. If you check the fact sheet today, you might be a bit concerned because we have about 50+% cash. That is not reflective. That is because at that point of time we had a big redemption. It was actually an internal investor at that point of time. But now it's already bought up. So currently liquid assets we have about only 5%. In general, this fund will have about 5 to 10% cash at most times. Reason being is because small cap, we need to act very fast. So 5 to 10% usually gives us that liquidity to buy into stocks. 5% is the optimal, 10% depending on the market.
Okay. Due to Mr. Belqaizi, due to the time constraint, I think I take we answer the final question over here.
For sure.
Okay.
A lot of questions. Oh yeah, not 10.
With a positive economy recovery, what is the forecaster or predict return of the mentioned funds?
Okay, we usually don't do this because we can't actually provide returns or forecasted returns to the investors, because this is not a target return fund. However, if you look at the historical performance, last year it did 45%, mainly due to stock selection. Of course, it was driven by two sectors, gloves, healthcare gloves and tech. Historically, over the past 3 years, the fund has done about 15% per annum. So this year we can't actually give you a target return, but of course we always like to advise investors when they buy this kind of fund. You have to stomach the volatility a little bit. Like we started the year about 11-12%. Now we're about 0.5%, but we're not concerned at all, just to be honest with you, because we look at it on a longer term basis. Again, good year we can do 40. On a bad year, you can do slightly flat. But that's the range of what the fund is all about. But we can't give you a target return per se for this fund, unfortunately. I do apologize for that.
Okay, thank you so much, Mr. Belqaizi. Ladies and gentlemen, this would be the end of the Q&A section. If you have further questions, feel free to send us an email at investhelp.my@fundsupermart.com. Coming soon, we will have another section of the webinar is 16th of October 2021, where we will share about the guide to read the bond document and mastering the bond special feature. If you haven't registered yourself for the event, do register on our website, www.fsmone.com.my. A replay of tonight's section will be available after this. You may proceed to our YouTube page, FSMOne Malaysia, to catch this replay. Once again, thank you very much, Mr. Belqaizi, and thank you everyone for attending tonight's section. Good night, everyone.